Hi there, this is Chris from MoneyHub, and this video looks at business loans and the frequently asked questions that come with them. So, a lot of people, a lot of small business owners write to us and they ask us many questions about business loans. We've compiled a comprehensive list of these FAQs within our business loans comparison guide, which I've linked to down below to help you, sort of navigate through this quite sort of difficult, not very transparent process of applying for business loans. So the first question, I'm going to go through a few of these questions just to kind of sort of add some commentary around what's already written on the MoneyHub guide. But as I said, you can click on that down below and you'll be able to be taken to it and you can review these in your own time. Now, so the first and most common question is, what do I need to qualify for a business loan? So as a background, lenders know that lending to businesses is very high risk. It's not like a mortgage where, they're securing over a property. Car loans are even less risky because there's a car at the end of the day. Whereas businesses, what priority are they going to be in the debt? All sorts of things like that. What existing liabilities are there? So this is why they ask for a lot of information. What they ask for will vary from lender to lender. That's a fact of life. But you can you can put your strongest foot forward with having the most information and making sure all the data is consistent, making sure it's truthful, because a lot of people will admit things or will not really want to talk about things. But the more transparent you are, the more realistic it is, and the lower interest rate you'll get if you are able to be lent to. So, first of all, a statement of financial position. This is basically looking at your personal assets and also your debts. So, looking at your property, your car, anything that you have as like a personal asset, and then looking at the debts which come with that. A lot of the times, these business loans will take personal guarantees. So, they want to make sure that the person who, they're lending to can repay it with their own money should something go wrong and like sort of down the line. Uh, s- Second to that, you need to disclose how much you earn from a salary or is from a wage from your business. Sorry, so basically what that is looking at all your reports from the IRD, what you've paid yourself if you have an accountant, basically disclose all that. Because if they're looking at, if you haven't paid yourself for 6 months, then that's a red flag that looks as though the business isn't really viable or something like that. So lenders will be nervous around that or not willing to lend. But if you're paying yourself a stable salary, if you like month on month, it's pretty much the same or increasing or fluctuates slightly, then that shows it as like a more stable business where it's got a higher chance of lending. You need to also talk in, as to a business plan. So explain exactly why you're borrowing the money, what's it for, because that's ultimately and critically important to a lender. Normally, it's going to be for working capital, but sometimes it may be for expansion, it may be for debt repayment, something like that. So just be very clear on what are the loans for and make sure that your numbers support, the need for it. Cash flow forecast, very important. So some lenders ask for it, some don't. Some can deduce already from what you've supplied them with the other information. But if you have that, then it's very useful because cash obviously is king, especially when it comes to repaying loans. Most loans are going to be for businesses are going to be between 6 months and 3 years. So, to get these sizable amounts of funds repaid, cash flow is absolutely critical. What security you plan to provide for the loan. So that's, as I sort of touched on before, that's more of a personal guarantee or a security registered over something personal. And then, like normally, you'll need to like provide information of who owns the business and the management. The number of employees, the operational structure. Sorry. So is it a company? Partnership, or is it just a sole trader? I shouldn't say just a sole trader, but is it like it may be a sole trader? Then looking at IRD returns to verify income if you have a staff, pay PAYE returns, things like that, GST returns. Then most importantly, copy your bank statements and then confirmation that you've received professional advice from a financial advisor or accountant. That is asked sometimes. It's not always the case. Some lenders are ready to go on like more sort of data-based information, but it's good to have and just make sure that you understand what's going on. So lenders are going to look quite thoroughly now, especially because as market conditions change, the risks are higher, money's far more scarce. So they will go into your business. They may be sort of experienced in your sector or in your industry. So if they have questions, then prompt answers on those are very, very helpful to them. But they're going to be doing a whole bunch of number calculations, ratios, looking at all sorts of things to determine whether or not they'll move forward with your loan, and if they do, then what interest rate and what terms and fees they'll offer. So, how much deposit do I need for a business loan is a very common question, but usually the answer is no deposit. It's not like a mortgage, it's not like anything like that. If there are fees, upfront fees, which will be paid when your loan's approved. There's never any fees on application. If you do see if you do see a loan offer or a loan advertised like that, then I would say be very cautious because that sounds almost like a scam. And we have seen these things before where people have been promised, oh, well, we just need 5% of the loan and then you can draw it down and then, money's been remitted. That 5% for the business loan, and then the lenders just vanished. So taking the 5%, which is quite significant if you do that over and over again. So just be very cautious of those. But yeah, usually fees of 1 to 3%, and that's going to get the loan over to you like in the full amount, or you can draw down it as you need it. How much can you borrow? This really does depend. We talk to a lot of lenders. You can get unsecured for around 75,000. $200,000 secured loans are not that unusual because, of course, you're trying to fund, like a business's growth or working capital needs. So the answer there is really it's going to depend, but you should only apply for what you need. So never, yeah, we would say never under apply because it's just going to mean that you need more money and it's going to be more expensive later on if you can get it because someone else is going to is going to have to provide it, and they're going to probably be lower down on the ranking of security. So the interest rates will be higher. So whatever you do need, be realistic about it and just go with that amount. Don't try and under apply because it's just going to be problematic and cause a lot of stress. Can I repay a business loan early? That's a very common question. Most cases is yes. Some lenders will let you do it without any charge, which is very nice. Some lenders will charge you an early repayment fee. You'll need to look at the terms and conditions to see what those fees are. We've made a comparison in our guide, which I've linked to down below, to help you sort of see which ones do early repay charge and which ones don't, or charge, sorry, the early repayment fees. But that's certainly something that is quite flexible. So if you are looking for an early repayment, then that's something that you should probably look in, sort of prioritize with what lenders you talk to or what lenders you apply with. How is the interest rate calculated? So usually it's going to be looking at the affordability and the credit score or the credit history, plus the purpose of the loan. So if it's an asset purchase, which is something, quite low risk, and the person has high cash flow and has very strong credit, then the interest rate's going to be much lower than someone who needs it for working capital and hasn't got a huge amount of spare cash flow to service it, but just enough, where the credit history may be a little bit stretched. So it's just going to come down to like applying, making sure that you've supplied all the required information. Then it's going to be for the lender to determine what that interest rate is, and that's why it's often good just to get a few loans in the mix in terms of applications so that you have a range of interest rates if you are successful and can properly compare without any shortcomings. Because sometimes, of course, money is urgent and you may apply for one, but if you only get one and the interest rate seems high and you go ahead with it, then that can cause issues later on if it was not the right interest rate for your needs, or or you could have got a much lower interest rate. And so we see a lot of variance in them between lenders from what we talked from who we talk to and what we hear. So it's just good to always be comparing. Now, is it a fixed rate or is it a floating rate? They're usually fixed. That's just the standard nature with business loans. No one really offers a business loan rate. It's just not really part of the industry. You'll see that, of course, for mortgages, for residential mortgages or investor mortgages, but you won't see it with business loans. How long does it take to receive a business loan? The usual answer is it's going to be 1 to 3 working days. Sometimes it can be a few hours, which is very helpful for some businesses. Uh, but at other times, it's going to perhaps take some time from the approval. You're going to have to then sign some things, and there's going to be a drawdown and some checks and everything like that. So usually it's safe to allow 1 to 3 working days. And then the second question to sort of follow it up to that, do you have to pay the arrangement for your application fee? As previously said, yes, but it's not going to be significant. It's going to be a fee which is only charged on success. And if you, as I said, if you do see lenders who are wanting fees in advance with no promise or no guarantee of anything, then be very cautious. At the same time, if you see someone who's advertising a loan with a guarantee on application, then also be nervous of that as well. So there's a few things to watch out there, which is why we like to profile and compare trusted lenders who are more transparent than people who run sort of shady adverts over the sort of social media. How much do I have to pay under the loan agreement? So that's going to be determined by how much you borrow and then how long it takes you to repay. So if it's a 6 month repayment, it's going to be a lot more per week or per month than if it's a 3 year then it's a 3 year repayment. So it's really just it's going to come down to what you're offered and what you can afford. Lenders are ultimately fanatical about making sure that what you borrow is what you can afford to repay. So they'll come up with something which should meet your needs, but in saying that, make sure you do stress test it and make sure that you are happy with it before signing on. Otherwise, if you have signed on and the payments need to be made every week or every fortnight, and they are too high, then that's gonna be a massive issue for your business. And then, so sort of related to this, what happens if I can't keep up with repayments? The answer to that is you really have to talk to your lender right away. Um, there's no point in kind of just trying to disguise it, trying to hide it, because the risk is that you're just going to fall behind further and you're going to get yourself into more financial stress or make some short-term decisions which have long-term consequences. So, yeah, the best thing is just pick up the phone, contact the lender, and be completely transparent because they need to know, they need to assess, and it's just that's the best thing you can do. Now, finally, are business loans secured or unsecured? So they can be both. Obviously, secured loans get lower interest rates and can be for like a higher amount, but you can also get unsecured business loans for short-term borrowing that don't have any security whatsoever. The issue is though, of course, if you don't repay them, then the lender can put you into administration, petition for your bankruptcy. So you do have to be aware of that, and there's many cases in New Zealand of lenders doing that. So don't just think that if you don't repay it, then there's no consequences. There certainly are. But by an unsecured loan, it just means that there's no security over a specific asset. But they've certainly got the right to take you through the court system should it sort of get to that. So thanks very much for listening. Like there were quite a few frequently asked questions to cover here. If you do have any more questions, please write to us. Our contact details are down below. You can also leave a comment on this YouTube video. We're very responsive to comments. We constantly want to improve our guides to business loans. So anything that you do contribute will be very much appreciated. Thank you very much, and we wish you the best with your business and anything related to it.